everyone, and welcome to my morning report analysis videos on Monday 26th of March with me, Richard Perry, market analyst at Hantec Markets. Markets have taken a little bit of a step back higher, a little bit of a recovery as sort of risk appetite has improved. Now let's just see very quickly the markets board whereby you can see these equity indices in the European session have all bounced, not massively considering the sell-off that we've had, but considering we had Wall Street that was sharply lower on Friday. We've got all these European indices that have bounced a bit today. That has come amidst an improvement in risk appetite, as comments from Steve Mnuchin have helped to sort of settle down the fears over this trade war that's potentially developing between US and China. I personally think it's always going to be the fact that Trump would initially go hard and then sort of step back a little bit as his sort of negotiation businessman head sort of takes over, and sort of you end up with a bit of a compromise in the middle. And I think that's going to be how it plays out. But I think in the meantime we're going to see sort of fluctuations on news flow, and I think today we've had a bit of a recovery, but will it last? Will be the question. But you do also have the dollar that's under pressure. We've now broken back below 89.40, which on dollar index was the low from March, and it's broken to the downside. So arguably that completes a little bit of a range breakdown, and sort of the market is back on its track lower again. But it's interesting that what we have seen is a little bit of a recovery in Treasury yields, which has not really played out through the forex markets today, but certainly we have seen that rebound in 10-year and 2-year as the risk appetite has improved slightly, but the dollar not feeling the benefits of that. Generally speaking, though, I think markets are fairly settled because there's also no real data today to sort of speak of that's going to drive markets. You haven't got a great deal on that economic calendar to really impact. So the markets are fairly well set in this little recovery mode, and I think it'll be depending on how the US markets open this afternoon. But certainly at the moment, a little bit of an improvement in risk appetite and risk sentiment. Now, my chart of the day is the dollar CAD. Now, what we've seen is the oil price looking to test its key highs again, and what we've got on dollar CAD is the Canadian loonie strengthening. The dollar is weakening, and the US dollar is weakening, and the Canadian dollar is strengthening. As I said, that comes with the oil price, which is also strengthening. So it's certainly helpful for the loonie at the moment. That's pulling dollar CAD lower. Now, what we saw on Thursday, Friday last week were these two pretty long lower shadows, which suggests the market was testing lower, arcing towards that 28 big figure support. Not getting there, but look at these momentum indicators. Big bear cross on those MACD lines. RSI at 50, back to levels not seen since mid-Feb. You've got the stochastics, which are pulling lower as well. So all sort of considering we've broken that uptrend and starting to track lower, it looks like we're going to be testing that support to 128 to 128.20. Which were those lows from Friday and Thursday, and that is a support band, clearly 28 to 28.20, clearly a support band, and a breakdown would be a significant move, sort of certainly on a near to medium term basis, because that is a key higher low which has been broken. And the market then starts to sort of form a new sort of downtrend potentially. So that could be a key factor that we're sort of starting to build towards dollar CAD breaking down. Now you've got the hourly chart where you've got the momentum indicators all negatively configured. Look at those. RSI failing at around the mid-50s, MACD lines failing around neutral and negatively configured. So any sort of rallies are being sold into. You've got lower highs across the board as well now forming. 29 figure thereabouts was today's high. 29.50 was Friday's high, and Thursday, Friday's high. So you're sort of measuring in 50 pip increments at the moment, I suppose you could argue, back, and then you got sort of back towards 28 figure. So we are sort of building towards, as I said, a test of those that support area, and a breakdown would really start to sort of make the market look far more corrective again. So it'll be interesting to see how this one develops, but developing into a corrective phase. So I wish you good luck in your trading, and I'll speak to you later.